Thank you so much for joining us on the Dwelling Show. I'm your host, Oladantes. I've got the amazing, incredible Nick Brown with us today. Hey, Nick, how you doing today?
Hey, y'all. I'm doing really well. Thanks for having me. How are
Yeah, no,
you?
my pleasure. I'm doing great. I'm doing great. Let's jump right into it. I mean, Nick, you're crushing it. You're doing a ton. So I'm sure you can do a way better job kind of introducing who you are to our dual listeners. So just tell us a little bit more about, who you are and kind of what you've been up to lately.
Well, I'm from Mississippi originally. I grew up in Northeast Mississippi, and after college, joined the Coast Guard and was stationed all over. Stationed in New Hampshire, Florida, California, and ended up in Portland, Maine. And you know, through the Coast Guard, I was on the ship a lot, and so had an opportunity to really dig into some books that I really should have read in college, but got into investing and trying to figure out, because I was like 22-year-old guy, and finally had a real job, making a little bit of money, trying to figure out what to do with it. And so my dad recommended a couple of books. One of the books he recommended was Rich Dad Poor Dad, as I'm sure all of your listeners are familiar with. And he also recommended The Total Money Makeover by Dave Ramsey. And so that just got that got got my head spinning a little bit, trying to figure out, what I wanted to do and how I wanted to organize my life moving forward. And that really planted a seed with commercial real estate, or real estate in general. And then in 2011, I met my wife, my girlfriend at the time, my wife now, Lily, and she was from Maine, lived in Maine her whole life, and we decided to call Maine home. And so I stayed and got out of the Coast Guard, and very shortly thereafter started my own health and fitness business, started a gym. And I hated paying rent. I was writing a check for $1,500 every month. And through the gym, I had some personal training clients that I developed a relationship with, who were into real estate. And one of them, he's still my mentor today. He would schedule his time. He was like at 11 a.m. And we would stay and, we would chat for an hour after every one of his sessions. And I was like, how do you have this much time in your day? And he said, well, and he was, he was mid 50s, but he sort of started talking about real estate, how he did it, and what his day looks like, and sort of what to look for. And I got into my first deal because I was always looking for a place to move my business. I wanted to buy a piece of real estate and put my business in that property. And there was this old rundown cheese factory a half mile down the road, which was a phenomenal location, but it was just a rundown facility. And I actually, it was totally vacant. Nobody lived there except for the squatters. And I actually broke in a couple times to look through it, but it was an old cheese factory and a fourplex on the same lot. And we scraped together, and during this time, my wife and I we were married shortly after we started the business, but we were living in a 10 by 10 room in the facility, in the gym. Didn't have a shower. And so every night after work, we would drive down to the town landing and pay $1 for 7 minutes of hot water, and take a shower down there, and then just rinse and repeat every day for pretty much 14 months, and just scrape together all the cash we could. And that was enough to put a down payment on this piece of property that I wanted. What happened was the bank, it was Key Bank, had been trying to foreclose on this property for months, but they couldn't find the owner. And so I went to the mentor, the guy I was training at the time. I said, hey, how do I do this? How do I get this property? And he said, well, go down to the town and try to try to figure out who owns it. So I did that, went down, figured out who owned it. And then he said, and I said, hey, I figured out who owned it. Now what do I do? And he said, well, go to the registry of deeds and figure out who has a mortgage on it. So I went down to the mortgage, talked to the clerk, or went down to the registry of deeds, talked to the clerk, and she helped me find it. And KeyBank had the mortgage on it. And so I actually had a relationship with KeyBank. I called them. I said, hey, what's going on with this property? I'd like to buy it. Well, and then I went on Facebook and I found the owner. He was in the British Virgin Islands as a boat mechanic, just hanging out. And apparently he had abandoned all of his properties. He had just cut ties and left. And so I got on Facebook, sent him a message and said, hey, I'm interested in your property. Can we work out a deal? Well, a long story short, a bunch of Facebook messages later, I ended up buying the note from KeyBank, writing the owner of forgiveness of debt in exchange for a deed in lieu. And so that was how we got our first property. I begged a bank to give me $250,000 to develop the property. And we were only a 14-month-old business. And I just came across the right broker at the right time. He was new in his career and he was trying to build out his portfolio. And so he agreed to give me $250,000 based on the very little profit and loss that we had. And so we made it happen. I GC'd the whole development of the property. It's a 4,000 square foot commercial space where I moved my business. And then I also built out some extra spaces in that same building for chiropractors, nurse, physical therapist, massage therapy, a yoga studio. And so, or at least that was the vision for it. And then just my wife and I renovated that fourplex. We actually turned it back into a duplex. And we lived in the top, rented out the bottom, house hack style. And we did that for, 3 years. And basically from 2013, when we did that deal, I didn't really do much in real estate for the next 5 years because my wife she was in physical therapy school. And then when she graduated, I went to law school. And so she took over the business and the real estate. And then I transitioned back to academia and focused on law school for 3 years. And then from there, I was lined up to go to a big firm. I had done a summer associateship at one of the big firms in Portland, Maine. And I was just looking around at the partners, and they'd been there for 30 years. I was like, man, is that really going to be me? I can't imagine this life. And I ended up taking another position at a smaller firm that offered a little bit more flexibility. Another one of my clients who I also met through the gym and had served sort of a mentor, I took him out for golf because I just want to bounce some things off of him and really see if he would give me a job. And after 3 holes, he just said, man, forget the big firm, come work with me. He owned a law firm, which he practiced out of, and he owned an assisted living business. And so he was on the real estate side of that and the provider side, but he had built 11 facility portfolio just over the course of 20 years. And so my job would be basically practice law part-time and also help him with the real estate part-time. And in 2018, I was representing a client. I went into a local bank, and every time I go in the bank, I'm always talking to the loan officers, asking them, hey, if they got any deals, they know anything's going on. And in this particular bank, it's a tiny 1-branch bank. So every time you walk in, you see the CEO. And he says, hey, Todd, what do you have going on? And he said, actually, I have this 9-unit that I'm trying to get rid of. Do you want to come take a look at it? And I said, yes, absolutely. And so I went and took a look at it, loved the building. It was a total disaster as far as management goes, but the building was beautiful. And I went back to the office, and I had, so to cover my overhead in the law firm, I had to bring in $45,000 a year. So I had to bill out, roughly whatever that is, $500 or 500 hours a year, and then whatever else. There was an equity split. And I just went to my boss and I said, "Hey, do you care how I bring the money in? If there's a way to bring in an extra 45,000, could we look at this real estate deal?" And that was basically the first deal I syndicated. Basically, I said, hey, I worked out a deal with my boss to where he would put in the down payment. I would pay him 10% preferred return on his down payment, and then we would split the equity after he got his money back. And that was really the first deal that we did together.
Wow. Wow. I mean, I've been listening to you for like, I don't know, like 10 minutes or it's just, I mean, my notes is packed. It's packed. I want to let you keep going on, but there is so many things that you've said, so many nuggets. I mean, the one thing that stuck out to me, and I've got this in bold, is sacrifice. You guys were, living in this space, in your gym at the time, and you'd have to go pay to take a shower every night, right? When somebody sees your post about, oh, I just closed on a big apartment building or 18 unit, they just think, oh, this guy maybe he got lucky, right? But I mean, this was sacrifice, right? You guys took time and, before you actually got to all of this. So what I want to ask you though is, how did you guys do it? How are you able to keep going for like 14 months, and just kind of pushing, and your wife was on board? Because a lot of questions, and you probably see this on Bigger Pockets, is how can I get my spouse on board in terms of real estate investing? So how were you able to make that happen? I think it's fascinating.
There's a lot of blood, sweat, and tears in there that we went through. And I told her, she actually, one of her posts on Instagram the other day was, I said, "You're the only one that could stay married to me," because I'm always talking about ideas, always trying to, always trying to figure out a way to hit our goals and improve our life. And I think it just boiled down to trust. She put her trust in me, and I think I was able to demonstrate that through the business, because the first year, I was there every day on the day-to-day while she would and then she would commute down to school. And so doing that, she really had to let go because she had to focus on schoolwork. And she came home, everything was good, our business was good. When we started that business, we got out of the coast I got out of the Coast Guard with I had $10,000 and she had $10,000, and we put $20,000 together to got about another $20,000 in debt. And so that was a big leap for her, because she had really just put her money in savings accounts, all throughout up until that point. And so her giving me that and me building it, I think, was a major stepping stone for us. If I would have failed or let her down in that respect, I think she wouldn't trust me as much as she does. But we worked alongside each other. I mean, to get that place ready for opening our business, I mean, we worked till 2 a.m. the night before opening day, and we signed up 20 clients before we opened and set a deadline. And so I think that trust just was built one day at a time, one block at a time. I mean, it's just like any marriage, you really don't know the person until you live with them for, you've been married 5 years and figure out who they
Absolutely.
are.
Yeah. I can totally relate. So I think you should keep going. I loved where you were. So you were on the 9 unit. Sorry, I kind of cut you off there, but you were on this 9 unit. You were able to get your boss, you're able to get buy-in from your boss. So kudos to you. I mean, that's amazing. So you can continue from that.
Yeah, and then shortly thereafter, my boss actually had a 7 unit that he was trying to get rid of. He had actually moved up closer to where we are headquartered, and he had bought a 6 unit and built a 3-bedroom house on the same lot, making it a 7 unit. And he had been trying to sell it. Nobody was biting, and I convinced him to basically owner finance it to me and another partner that I had down in that area, who has been a good friend for a long time, and it was right in his backyard. And so we owner financed that deal. Um, Went in, raised rents to market levels, improved the properties a little bit, and was able to make that cash flow pretty quick. And then 2019, I caught on fire. We started moving pretty quick. 2019. In March, we closed on an 11 unit, and it was the same deal. Basically, this property had been on. I mean, I found this property on LoopNet. It had been listed for 3 years, and it was a little bit run down, but people were looking at it in a multifamily sense, and I went and looked at it. They wanted 440,000 for, or they're asking at 460. We ended up getting it for 440. But what made that deal work was, instead of treating it as a multifamily, I actually switched it to, actually pitched it to a guy that runs some rehabilitation centers. And so he takes, his patient. He took the property, leased out the whole bottom floor to professional office space. So there's all kind of therapists and folks in there that use the first floor. And then his business is providing housing as well to all of the patients that are going through the rehab. And so he was able to turn each room, instead of an 11 bedroom, instead of an 11 room facility, he basically puts bunk beds in each, and now it's a 24 bedroom for him. But I rented it back to him at a at a triple net lease, which is through the NOI skyrocketed through the roof, making it pretty much a 12 cap. And so we solidified. We had it at least before we closed on the deal, and that was sort of a prerequisite for going through that. I really didn't want to go into that property without a solid tenant. And then shortly after, and in the same month, I closed on a 6 unit in my town. This was an off-market deal. We had a relationship with the owner. And by this point, my wife and I had built a house. So while we were in school, we built a house of our own. We moved out of the duplex, moved into the house, and my dad flew up, helped me with the plumbing, with the electricity. So we did everything ourselves. And we had a ton of equity at the end. So I took out a line of credit against the house, and then the 6 unit basically got it for $200,000, and then used a line of equity as a down payment. And we put another $100,000 of renovation into that, and that property should refinance out at about 350, and so we should cash out 50
Wow.
grand.
Wow. I mean, so many things to talk about, Nick. First, congratulations. You had that little bit of a gap where you kind of, from, I think it was 2013 to 2016, where you were just kind of quiet, and then, kind of things took off. So I think first and foremost, how were you able to convince your boss to, not only allow you to bring this equity into the business through real estate, but actually convincing him to put down the down payment? And the reason I asked that question is, a lot of people struggle with, how I can find deals, but I can't really find money, or I can't get, somebody to help partner with me. How are you able to kind of, make that work for you? I think that's interesting.
I really have to give the credit to my boss. I mean, he's a phenomenal mentor, phenomenal person, and I look up to him greatly. And he gets it. I mean, we sat down and I said, listen, this area, I'm going to bill out $200 an hour, and the most I'm going to be able to bill is probably 40 hours a week for 50 weeks a year. So that's the max I'm going to be able to generate for the firm is $400,000. I said, but this particular deal, I said, we put this deal together, it's going to cash flow $40,000, $35,000 to $40,000. If I do 10 of these, we're hitting the same numbers. We're building equity. And we're not having to spend, we're not spending time. We're not trading our time for money anymore. And so he got it right away. And and he has a lot of real estate experience of himself. I mean, he owns 50 or 60 units, in his own right, and so he sort of got it. And he actually financed the 11 unit as well. We needed the same deal basically. He put down the down payment. I paid him 10% return. We split the equity once he gets his money back.
Nice,
And
nice.
so,
Yeah, that's amazing. Yeah, that's an amazing God sent boss, I would say. I mean, that's that's amazing. Yeah. So I mean, I really love what you did as well. Just kind of to go back a little bit. I know we're kind of all over the place, but kind of using Facebook to find, the seller. I thought that was kind of genius, right? Because we don't really see Facebook as, a kind of skip tracing tool, I guess, like, but Yeri is a free tool, and then you were able to get that guy. So that was really fascinating. I thought that was really, really kind of good to mention, right? So, yeah, I mean, kudos to you. So, we're definitely coming towards the end here. So, I mean, you've got a ton going on, right? You've got your business, you've got all these properties that you've acquired, pretty creatively, actually. You know, pretty genius, I would say. What is next for Nick and Lily? What are you guys kind of thinking? Are you gonna kind of scale up and kind of put together kind of this very unique portfolio? Like, you talked about the patient, kind of, is that what you guys are kind of going to be doing, scaling that way, or what are your thoughts?
yeah, and so I think we're going to. We basically we started Avery Investments, which is my partner and I own, or my boss and I are now partners in that business. And the goal of that company is to build out a multifamily portfolio. Our goal is 1,000 units. Right now we just closed on an 18 unit in South Carolina. We have another 137 units under contract due to close. Close on 63 units next month, closing 42 units in December, and then should close on 32 different units in January. And I see us transitioning down to South Carolina. Maine, I love Maine to death. I call it home. It's been really good to me. But there's a million people here in the whole state. It's a huge state, and it's hard to. The types of properties and opportunities for scalability are just not here, and so we're looking to branch out and hit those areas in the next 3 to 5 years. And we're looking for partners. I mean, we're looking for folks that want to get in the weeds and work with us. And so I
Yeah.
think so. Anyway.
Yeah. No, that's awesome. I mean, you've got a 137, the 63 unit, the 42 units, plus what you've done in the past. You're a quarter, at least a quarter. You're closer to your 1,000 unit goal, and I'm pretty sure you're gonna surpass that. So, good job on that. I really, really appreciate the things that you've done, actually, because it's so different, actually. So we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
I am.
All right. Very first question. What makes you unique? What is that differentiating factor that separates you from the next guy or the next girl?
I don't think I am that unique. I'm an optimistic guy. I like to solve problems, and I've always been pretty curious about how stuff works, how to put stuff together, and I think just a natural curiosity and just a stupid ambition. Uh, you know, uh, Sometimes it's not even particularly realistic, but I would say that I am unique. I just have always tried to pursue the things that I want, and I think that the pain of not doing it hurt worse than the pain of doing it. And so I think that's a Rich Roll quote. He says that a lot in a different context, but some of this stuff I just had to do, and I think that's what would make me unique.
All right. Second question. What was the last book you read, and what was the one thing you picked up from that book?
Well, the last book I read was Crush It by Gary Vee, and it's a little bit out of date now. I should have read it 10 years ago, but he just screams authenticity, and that's really the takeaway from that book is, look, you need to change your model with the current landscape, rather than trying to shove a round peg through a square hole. And while you're doing that, be yourself. And so we tried to embody that in our real estate deals and with our with our syndication model. Actually go into the folks that are interested in pursuing this dream with us, rather than the typical institutional syndicator.
Last question. What do you do for fun?
So my wife drives the fund meter at our house. If it were me, I'd read and chop firewood. But we are pretty avid hikers, mountain bikers. We just did a mountain bike race not long ago. We do a ton of skiing, snowboarding, cross country skiing, and we have 2 pups, 2 dogs that we pour all of our hearts into, and so.
Awesome. So if there's somebody listening and they want to kind of connect with you, what's the best place folks can reach out and get to know you more?
Instagram, Bosley's_dad, or Avery Investments, .me, my website, or Facebook, Nick Brown. So tons of ways to connect.
Nick, thank you so much. I really appreciate your time today. Talk soon. Thank you.
All right. Thank you all. Have a good day.